Hello guys, welcome back to a new video. Today's topic is this right here, this question. And this gentleman asked me the other day on my previous video, can you explain how you identify a sweep? This is a very good question, and this is going to be the topic of this video. I'm not going to just explain this to identify a sweep, but also how to identify a fake out, a fake move, and how do you pair the sweep with identifying that fake move to come up with the best setup possible. And I wanted to talk about this right here in the previous or yesterday, but I didn't have fresh examples, so I didn't want to go back in the past and look for inside examples. So I waited till today's trading end to get fresh examples, live trade examples. So trades that I took to reinforce my theory on sweeps and fake outs. So these are the trades that I'm going to work with. You can see here, this is the first one, actually the bigger one, and this happened on the microstructure. So this is going to serve as an example for today's topic. All right, so first of all, let's start with answering the question, right? Can you explain how you identify a sweep? First of all, I want to talk about what is a sweep, and then what is a fake out, a fake move, fake breakout, and then I'm going to talk about how to identify them and how to pair them together. Suppose that this right here is a previous high, right? An old high or a recent high, doesn't matter, but this is a previous high. A sweep is when price is trading to the upside, and then here we don't have convincing closures. We can see weakness when price trades above that high, right? Now this doesn't qualify to be a sweep first, it needs to have some confirmations after. But when we see that there is a weakness here when price trades above a high, that can indicate two things, two possible scenarios. The first one is that weakness will result in a move back into the range. The range is basically the last move, which is this whole move to the upside. We can see, or we can expect a move to the range, right? So this right here can be exploited on the lower time frames. I don't recommend exploiting this on the same time frame, right? Because it can be a bit demanding on the TP if you want to take it on the same time frame, but this move can be enormous on the lower time frames and you can capitalize on that. So that's the first scenario, just a pullback into the range after this weakness and then continuing to the upside. The second scenario is we trade all the way to here and negate this whole move to the upside. So this right here is a fake breakout. This breakout above this is a manipulation leg and we're gonna negate it, right? So this right here is a sweep on a certain high. Again, a sweep doesn't mean we're gonna trade all the way to the downside and negate this whole thing. We can have a move to the range and then continue to the upside, and again you can capitalize on that on the lower time frame. Or the second scenario is the sweep will result in negating this whole move, and that's the fake breakout. And I'm going to show you how that looks like in the examples later on, right? And in the next video maybe I'm going to show you more examples. So first of all, how to identify a sweep, and then I'm going to move on to how to identify this whole move. This whole leg is a fake leg and we're going to trade to the downside. So once you pair this with this, you can get a really good RR with a high win rate. So here all I'm looking for is a weak closures or wicks. So sometimes, suppose this is the 1 minute time frame, we can have a closure on the 1 minute time frame, but if you go to the 2 or the 3 minute time frame, or even the 5, we have only wicks. So that suggests weakness. So we don't have that big displacement above that high. When we see this, you don't want to take a trade inside the range. That's really going against the trend basically. But when we have weakness, weak closures, you can look for trades back to the range. That's how I identify a sweep. For confirmations, yeah, I look for some market structure shifts here, trading or violating some important zones. I talked about this in many videos. I can put them in the description, but that's basically how I identify a sweep, by just looking, waiting for that wicks and price unable to close on all time frames. Now, how do I identify that this whole move is a fake move, a manipulation leg, right? By basically looking at the overall trend. So suppose from here, this was the trend, right? And then you see this move trading to the upside and breaking this. So first of all, we don't have convincing closures, and this whole move is against the trend. So here I can assume that this whole move is just a manipulation leg, right? This is not the break of structure. This is not the end of this whole trend, and I can look for trades to target this low right here. So I'm pairing this sweep, the weakness here, with the idea that this whole move is a fake move, and I'm looking to take a trade to negate this, right? So as you can see, the more you progress into trading in your journey, the more you'll learn that by just following the trend, and not trying to reverse it and calling early market structure breaks, you can avoid a lot of losses. So let's just finish with this diagram and go to examples, and you can understand this. So here what happens, so this is the first trade, and I took it from here. Actually, I have a picture of it, and I also have the executions, but I'm gonna show them when the market opens. This was right here, the first trade, the bigger trade. The stop loss was a bit wide here, so that's almost 100 point. This is just on the 5 minute time frame, so NQ is really volatile lately. This is the first trade. I'm gonna talk about the logic behind it and how you can apply what I said in the start of the video to actually take trades. That's the first one, right? This is the second trade, right? So I took another trade. I had little confirmations here on the 1 minute time frame, and the 5 minute trade was still on. I took it from here, and these are the results. So this is the first trade, a winner, and then price retraced back and then traded to take this. So let me give you the logic here. So how we can apply what I said here into here: sweeps and fake breakouts. So starting with the first concept, which is the sweep. So once I saw this whole move trading to the upside, and this was the 10 a.m. news, right? A big move to the upside, but look how it reacted when we traded above this high. Why this high, not this high? This high is the obvious one. You can see that it has this high to the left of it, it has this high to the right of it, right? So this was obvious, and this one also, you can see it on multiple time frames above us, but you can clearly see that this one is the obvious one. But you can see that once price trades above it, look how the weakness, look how price is getting weaker. This big energetic displacement to the upside, and then here it starts to get weaker, trading to the downside. And I took my entry from here, and I'm gonna give you the reason why for the first big trade. And then one more time trading to the upside and then trading down, right? So you can see that there is a weakness when we trade to the upside. So again, a sweep doesn't mean that we're gonna trade to here, but It can be just a weakness, trade back inside the range, and then trading to the upside and continue. But the first trade, I took it from here and I was targeting this. So here I'm pairing the sweep also with the concept of a fake breakout. That means that this whole move to the upside is gonna get run through, right? This is a fake manipulation leg. Now, how to identify this? Again, by just looking at the overall trend. You can see that we are trading to the downside here. We are building this downtrend, and this downtrend started also with a fake move, with price failing to close above a high, getting weaker when you trade it above the high. I'm going to show you the higher time frame. So when I saw this move, there's a good chance that we're going to run through it one more time, right? This is not a market structure shift. So here I took the first trade with a bit wider stop loss. It was here. In order for me to avoid this, we can have one more run above the high, but still this is still just a fake move, and you can see that price traded below it one more time. Now this right here is only to trade back to the range because I used a tighter stop loss, right? And let me show you this the logic behind this. So if you go to the higher time frame, you can see that we have pretty much the same idea. You can see that overall we are trading to the downside, all right? And once we traded above this, right, we can see that first of all we have weakness. We can identify this, that this is a sweep. First of all, you can see that we have a closure, right? But if you go to the time frame above, you can see that we have only wicks right here. So we don't have that convincing body closures to the upside that can indicate price going even higher, right? So we are coming from a higher time frame sweep, and we have pretty much the same thing here on the lower time frames. And this is why I knew that this move, this sudden move to the upside, energetic move to the downside, is just a fake out, and we're gonna go and run through it, negate this whole move and take this. So these are the executions. I recorded this part after the market open. You can see here, this is the first trade, a straight market from here when I saw that we have weakness. So I didn't wait for other things, because simply I'm going with the trend, and just put your stop loss in a safe place. You don't want to be very aggressive with the stop loss, because you can simply get this one more time trading above this. But we know that this whole move is just a fake move, right? We can see that there is weakness when we trade it above this high, right? So I'm confident with my trade, but I'm not aggressive with the stop loss. And the TP for this was here. And this is the second trade based on the same idea, but on the lower time frames, right? On a microstructure. And the stop loss was here, and the TP was here. So this was almost like a 3.5 hour trade, or two trades. And here's the second TP. I didn't use a 15-second time frame for this, but you can see that you can get maybe confirmations from here, and you can know why I put my stop loss here and not here. So I don't see any reason of price going all the way to here. And also you can see that this whole move is a fake move. First of all, we have weakness about this above the high, so you can expect a move back to the range. But basically, with what the higher time frame is doing, we can also expect that we're not just trading back inside the range, but also to take this. But I didn't take this. This is a lower time frame structure. I'm taking the short position from here, and my stop loss here, and targeting internal structure. Of course, I could have traded, put my TP here, but again, this is internal setup, so it's better to have a reasonable targets, right? So you can see I'm pairing two concepts. The first one is the weakness when we trade above a high or a loss. I'm sorry, or a low, in case of a bullish example. The second concept is identifying that the whole move, the whole shift is just a manipulation, like a fake breakout. And when you pair and when you pair these two, you can get a high win rate, because simply you're going with the trend, right? So I hope you liked this video. I don't know if it seems hard for you, because I'm using this for a really long time, right? These two concepts. So for me, just this is something that I see every single day, and I programmed my eyes and I trained my eyes to see it and identify it in a matter of seconds. If you can't understand, watch the video again, or just simply backtest and look for examples like this, because it's literally everywhere. All right. So I hope you liked this video, and if you have any other questions, DM me on my Twitter account or leave a comment down below, and I'll try to answer you in the next video or in private. And now happy trading and good luck.